Hello, marketers. Welcome to yet another engaging episode of CMO Podcast Series at FTA Global Marketing Stat 2025. I'm Rachita Sharma, Vice President of Strategy and Client Success at FTA Global. E-commerce has quietly rewritten the rules of advertising. What started something as banners on shopping sites have quickly transformed into one of the most powerful profit drivers for platforms worldwide. Now, this shift raises a lot of questions around its economics, technology, and its impact on the future of digital advertising. To break this down, I'm joined by someone who has most extensive experience across these sectors, not exaggerating, maybe almost more than anyone else, Mr. Karan Taurani, Executive Vice President of Elara Capital. Karan comes with over 17 years of experience across media, internet, retail, and consumer discretionary sectors. Karan has been ranked the number one media and entertainment analyst in Asia Money for 3 consecutive years. His insights are regularly featured on global platforms like Bloomberg and the BBC. Few people have his depth of perspective on how advertising, e-commerce, and technology are converging. And I'm thrilled to have him on the show. Karan, welcome. It's an honor to have you on our podcast series. Any thoughts so far? How are you feeling?
Hi everyone. Thank you, Rachita. It's a pleasure to be on this show, and we'll be sharing a lot of insights on the e-commerce advertising ecosystem. A lot of things are changing. Things are quite dynamic globally and in India both. We'll be discussing about the global companies in terms of what they are doing, Indian companies, how they are kind of shaping up with these trends. So look forward to have a good discussion with you.
Awesome. So Karan, for the entire conversation, I'm just going to set the context initially. So over the last 5 years, e-commerce has turned into, from a small experiment into this billion-dollar driver, right? So from your vantage point, what has caused this acceleration?
A couple of things here for e-commerce specifically. One is I think COVID has accelerated trends towards digital. What we saw in pre-COVID times and what we're seeing right now today, 5 years hence, there's a massive jump in terms of number of online shoppers. And primarily this is obviously because of consumers wanting convenience, consumers not wanting to shop offline, and also enhanced experiences. With AI technologies, you can now even try a sunglass or even an eyewear online. You can even try a t-shirt online eventually. So these trends are actually shaping up, leading to better experience for the consumers. Lead times have come down. Back in the day, any e-commerce platform, if you ask, they would deliver the product within 4 to 5 days, which eventually came to 2 to 3 days, and now it's come to 30 minutes, 10 minutes. So things have become quite dynamic. So that's one thing, acceleration trend towards digital, adoption of digital, consumer willingness to go on digital. And second is innovation. Now what we're seeing with quick commerce is a very disruptive force. The market size would be small today at about $7-8 billion. As a e-commerce market is about $120-130 billion. Obviously more mature. E-commerce has been here since almost about 8 to 10 years, more than 8 to 10 years, as compared to Q-commerce, which is just about 2 to 3 year old market in India. So innovation has actually kind of led to better growth in this segment. So, to your question in terms of what's driving more consumer traffic, it is obviously innovation in terms of 10-minute delivery, dark store economics, the entire business model. Now, third very important point is the spread. So in terms of geographic reach, if you ask me about 5 to 7 years back, we were not confident that e-commerce will scale up in a big manner beyond metro markets. But that's come to be a surprise to everybody today. If you look at platforms like Nykaa, if you look at the platforms like Zomato, and they haven't been in the business for more than 10-15 years, they're about 8-10 years old companies. You can arguably say that 40%, 50% of their revenues today is coming from non-metro markets, which means there's an acceptance of digital, acceptance of online in the non-metro markets as well, which is a very good sign for the industry, which means that you can reach consumers at a very large scale.
Right.
And I think going ahead, this can only expand because we've just scratched the surface in terms of tier 1, tier 2 markets. Tier 3, tier 4 still very underpenetrated as far as expansion opportunity goes. So I think these are 3 drivers in terms of why e-commerce has seen a massive growth. So one, as I told you, is adoption of trends in post-COVID. Second, of course, innovation.
Right.
And third, of course, is the expansion in terms of markets. Another point on demographics, if I can share, is the Gen Z and millennials. Right now, they account for about more than 40-50% of our population. And they are the ones who have the purchasing power, the spending power.
Right.
Now, this generation is quite tech savvy. They are very impulse. They are quite demanding. They don't mind paying a premium for whatever they want to purchase. And they're not loyal at all. We've seen the advent of D2C brands across categories. You look at beauty, personal care, you look at apparel, you look at any other segment. They're not loyal at all, right? So I think this is another thing which is driving this entire big change in the online business. And I think this will continue for another 5 to 10 years. It's a very big story here to stay. In fact, our numbers may be smaller in terms of online shoppers versus China or the US market. But as I said, I'm pretty much confident that these numbers will see a big explosion as you see more and more people coming in this Gen Z millennial age. And as you see more and more adoption of these kind of services beyond the metro markets and maybe even tier 3, tier 4 markets in the future.
Right. Really rich perspective around that. And of course, the evolution of new different models that's sort of disrupting the entire piece. Now, when you map the ad revenue as a share of GMV and EBITDA across Indian and global platforms, I remember, you had a lot of, data-backed insights on that to share. What picture emerges about how central advertising already is to their business models?
So again, advertising is another segment in e-commerce which is taken us by a positive surprise, I would say. In fact, it's a very good thing. Now, firstly, let's look at the global trends here. Let's mirror some numbers globally. Globally, as you call it, gross merchandise value or gross order value is basically the sales that a company does in terms of e-commerce, which includes your discount, GST, the overall MRP price. Now, ad revenue generally has been in the range of 7 to 8% of GOV for many of these global companies which are operating at a very large scale and who have been in the business since more than 20 years. And, we actually try to analyze data in terms of how strong can a growth rate for the industry be. So, for example, people have got question marks in terms of e-commerce growth rate, which was earlier at maybe 40-50%, came down to 30-40%. Today, maybe it's at 20%, 25%. Something like an Amazon US in a mature market has actually seen growth of more than 20-25% for at least 8 to 10 years or even more than that.
Okay.
Now, this is primarily driven by innovation into new businesses. So it is not the reseller services or the third-party services or the Amazon e-commerce business which is growing, but the cloud business, the ad business, which is reporting a far stronger growth. And most of these companies have a platform stack, have the know-how. It is just about expanding into new businesses which are higher or larger in terms of total market and TAM size opportunity.
Right.
So we will see these kind of trends emerge in India market as well. But the surprising trend on advertising is that, as I'm telling you, India again as a market, if you look at the larger e-commerce names like Amazon or Flipkart, we have some broad numbers in terms of what they make in terms of India ad revenue. Until about 5 to 7 years back, e-commerce as a percentage of digital advertising was 10% or below, which is now come to about 20% plus. Right. And what's driven this, we all know that, it is all about eyeballs and consumption that drives traffic on a platform.
Right.
And that's the reason why, e-commerce has scaled up and today's 20% plus, maybe it's grown at 25-30% CAGR over the last 3 to 4 years. But another reason to look at is that e-commerce allows you better conversion on the platform because they have the first party data. They have the consumer who can transact. So when an advertiser advertises on a YouTube, you have to actually look at the ad, go on the link and go on the web page. Here, the advertising is very targeted. Okay. You can for example, if I'm searching, let's say for a t-shirt of a specific brand, I can enter the name there and I just get the product and I can buy it in my cart. What happened 5 to 6 years back is that the same consumer would go to Google search and search for that brand of shirt and so on and so forth. So I think things have become quite convenient, very dynamic. And as I'm telling you, e-commerce can even contribute maybe 30-40% of advertising over the medium term, the way things are going, because AI will be a huge advantage for e-commerce, as I said, in terms of the experience. So as and when consumer experience enhances, the better the conversions, the better the pricing, and the better the advertising budgets for e-commerce platforms.
Interesting. So let's talk about those specific verticals. Now, within that, which verticals, say groceries, fashion, electronics. I mean, the most, all-pervasive verticals across e-commerce, they're contributing most to the ed-led monetization today.
So, firstly, from a platform perspective, it depends on the size and the nature of platform. So, the broad range for advertising revenue as a percentage of GOV or GMV is in the range of 2 to 8% for any e-commerce or platform company. And if you look at the likes of Zomato, which is a food company, we believe that number is lower end of the band because they only appeal to the restaurants in a very large manner. For an Amazon, there's no limit because they appeal to multiple categories: apparel, grocery, jewelry, anything under the sun. Right? They have got a huge variety of categories, of products, and brands within them. So that number can even be 7-8% for an Amazon at a mature state. So I think from that perspective, you clearly see the market opportunity is very huge. And if you talk about the vertical mix in terms of advertising, traditionally we have seen that FMCG is around 35 to 40% of the overall ADEX in a market like India, followed by apparel, which is the second or third largest, and then you have electronics, white goods, jewelry, fashion, other things put together, which are maybe 8 to 10% or maybe low single digit in terms of share. But why FMCG is largest is because one is FMCG is where the consumer wallet spends are highest in terms of the products that you generally buy, and the second highest is apparel. So again, ad revenues or ad budgets rather are a function of two things. One is the time spent in terms of wanting to search for the product and the traffic over there, and second is the transactions, whether it could be online or offline. But the consumer is spending a large chunk of his or her earnings on these products, FMCG and apparel. As you say, roti kapda makan, right? So that's how it is. So I think this traditionally will remain there. But what is happening within the segments? So, for example, FMCG advertising is still 35-40% of the overall ad today in a market like India. But a lot of shift is happening between this. So, a lot of the D2C brands have come up. It's become very fragmented. As I said, the consumers are not loyal. They are willing to try new products, premium products. So, we will see change of hands in terms of advertisers, in terms of nature of advertiser, in terms of how much they want to spend and what they want to spend. But yes, FMCG and apparel are two segments which will kind of dominate the overall AdTech budgets.
True. And especially the fact that, all those consumers are not at all brand loyal. And we have seen those segments, progressing, especially towards Gen Zs. And of course, now it's across the categories, right? There are a lot of reports, I think by Google and Kantar on jewelry specific, skincare, beauty. I think there is this uniform trend across the entire tangent. Now we'll talk about the consumer shift. 5 years ago, most discovery happened on search and social, right? Today we see that consumer traffic is tilting into commerce ecosystems. Now, what do the numbers tell us about the shift, and how should brands respond?
So if you look at India digital advertising market, it has always been contributing more than 70-80% of incremental advertising. So digital advertising is extremely important for growth of advertising industry as a whole,
right?
Because traditional advertising growth rates are flattish or at a small decline. That's a valid fact. The second point I'm trying to make is that within digital advertising, a lot of things have changed hands. So until about 5 to 6 years back, if you look at the numbers, you would be surprised to see that 80% of digital advertising in a market like India is dominated by Google and Facebook, which is a very large number. Search social accounts for a large share. Right. Then came the advent of video, which again during COVID, people moved to OTT content. IPL was offered free. These things led to video also taking over in terms of the overall number, in terms of digital advertising. Right. Now, when I say 80%, that includes YouTube as well. So if you exclude YouTube, that number was about 70-odd%. Let's assuming 10% of the ad revenue digital is by YouTube. Now, YouTube, JioStar as platforms, and a bundle of e-commerce platforms have actually taken over the digital AdX pie in a very big manner, which has led to the share of social search coming down to 50% or below, excluding YouTube.
Okay.
Right? So they're at 60% odd today also in terms of India market, but if you exclude YouTube, they would be at 50% or even below that. So which means that again, there is clear pressure here in terms of more pressure on search than social. Because I think social has been able to innovate through reels and other things put together. But search is something which is seeing massive pressure because of display ads and banner ads, which is like a traditional thing in terms of digital advertising. One of the first things that we started when digital advertising actually took off in the market. So I think that has been the problem over here. But of course, it's very tough to call out or rather write off Google in terms of search advertising, because with AI, we don't know how things are going to migrate from here on. So Google actually is very strong in terms of their tech capability. So if you look at search also right now, when you search for anything, you actually get a summary of the product. So that is an AI related function. Now, how AI evolves within search advertising? Can there be innovation in search advertising which can combat or compete with e-commerce platforms? That is a key multiple. But as of now, the trend is very clear that for a brand who wants better conversions, who wants ROI, and who wants the end consumer, will keep moving their ad spends within digital towards e-commerce platforms.
Interesting. And I think the AI impact across the websites, I mean, 85, if I'm not wrong, around 85% of the companies, they have, witnessed a drop in their traffic, across. And I think a lot of the efforts are being made by the marketers on how to capture that. And of course, I would say that we are in a very groundbreaking position. I think it's either this or that, right? Now, among India's big D2C and new age companies, according to you, who is leaning into this shift most aggressively in terms of, say, digital ad budgets?
So if you look at any traditional brand, let's take the likes of large FMCG major like an HUL or a Darbar and so on and so forth. Now, for these brands, the share of digital advertising in terms of their budgets would not be more than 20 to 30%, right? Take the example of a D2C brand, for them, the share of digital advertising is more than 50-60%, right? And that's primarily because of the consumer cohort that they cater to. Now, the larger FMCG brands, and obviously size and scale as well, right? So larger FMCG brands have got a large size, a large scale. So obviously, let's say, for example, if HUL is doing 5,000, 10,000 crores of advertising budgets, they can't allocate 7,000 crores on digital only. They have to allocate to TV, print, and other mediums as well because they want to go for a mass appeal. And that's how these brands have traditionally been. But of course, the share of digital is increasing because the base is smaller and contribution will only keep on increasing in favor of digital. But for a D2C brand, the numbers are higher towards digital advertising in terms of budgets is primarily because the consumer cohort. They primarily cater to the youth audience, age group of 25 to 35, 40. Now, these are the consumers, as I said, whose willingness to try is very high, loyalty factor is low. They are okay to pay a premium, which means premiumization. So these are things which are quite disruptive in nature. And I think this spread or share will remain for a long time, unless we see consolidation, unless we see some kind of things changing. In fact, the share of larger FMCG brands, which is 25-30% on digital ad X today, will eventually move to 40% plus, given the kind of traction we're seeing on digital advertising, right? In terms of they could advertise on e-commerce or OTT or social search, that's a separate question altogether. But digital adoption is growing at a faster pace even for traditional companies, and eventually their share will also go up. And I think D2C brands will continue to maintain a 60-70% share. And within that bucket also, there are two types of advertising within digital. One is the programmatic advertising, other is non-programmatic advertising. So one is the digital campaigning advertising actually come down in terms of share. Programmatic advertising is catching up because here there are better conversions. It's obviously expensive in terms of pricing, but the conversions are high. So D2C brands are more aggressive and they really want to chase these consumers in terms of conversions on e-commerce platforms or social research platforms and so on and so forth. So I think this trend is very much here to stay. Two mega trends. One is D2C brands will continue to have a high share on digital advertising, and programmatic advertising continue to grow because marketers want to focus on ROI-led mechanisms and not just pure campaigning.
And talking about the programmatic advertising, I think it's getting more richer in terms of audience signals. I mean, you can't even imagine how narrow they can reach, in terms of the audience, as far as driving a visit to a showroom, right? You can actually track that particularly, for your campaigns and build that back. Now we'll go towards more from, technology and AI perspective. You've been tracking how Google, Meta, and Amazon describe AI in their earnings calls, right? So what are the clearest examples you have seen of AI lifting ROI or aligning ad delivery with a real intent? I think intent is what we all are fighting for. Yeah.
So I think AI can actually improve costs more than drive revenue. Revenue growth will also accelerate because of AI, because of better experience. As I said, consumers will often transact more, consumers can convert more. So revenue will obviously transact. You can see better pricing because of AI, because the experience is more richer in terms of conversion. But I think the big delta because of AI will be on costs. I think if you look at Google, Meta, some of these large companies, what they are talking of in terms of Amazon as well, their conversions have gone up by 25-30%. That's a large number. So imagine you are targeting 10 customers and your average conversion is about 20%, which is 2 customers. And at that same cost base, you are now converting maybe 2.5 or maybe 3 customers. Right? So you can imagine the explosion that you can have in terms of efficiency and margins.
Right.
So as I said, AI is a very big driver for overall profitability for the global tech giants. Even if you look at the Indian ad tech players, you have got Affle, InMobi, Trade Desk, PubMatic, many players across the world which are there. They are all seeing very sharp expansion in margin. And this is primarily because of AI-led investments. So firstly, AI is the future. Second, I think all these companies need to be very aggressive in terms of investing into AI. So they need to acquire companies, acquire capabilities, do a lot of capex, invest a lot in terms of R&D, because AI indeed is the future. So even if, let's say, even if you are having issues on cash flow or acquiring companies at premium valuations today, but in the longer term, these things will only play out in their favor in terms of increasing conversions, and it's going to stay on. It's not like a trend wherein, it's a cyclical thing that margins go up for 1 year, second year again they come down. No, it's a structural trend for next 5 to 10 years because of AI initiatives. And whoever is able to invest first or have a personal advantage in that particular segment. I mean, Google, Meta, they've done some multiple acquisitions which are in the range of $5 to $15 billion. Some are $8 billion, some are $12 billion, which are large size acquisitions. So that just goes to show the serious intention that they have for AI. And the future is bright as far as AI is concerned.
And of course, I mean, we are already seeing a lot of good impact in terms of bringing in the efficiency in our current campaigns because of it, right? So, Karan, we were talking about the technology and AI, impact. Now, let's go a bit niche towards the Indian context, right? So, what do you think how those local e-com platforms were using AI or first-party data, differently? How do they stand in comparison to their global peers, or in terms of driving the high returns, if any particular example that you have in mind?
See, I think digital businesses are all about scale. Right? Today, let's take the example of Netflix. Netflix is doing very well in US, but Netflix has been expanding to non-US markets aggressively in the last 8-10 years, more than that in fact. And all their growth is coming from the non-US market in terms of subscribers. So if you look at them as a business model, why I said digital business is about scale, because they can leverage upon the same content, they can make expensive content, and they just need to distribute that or dub that into multiple countries. That's what I said. And that's the first thing. Second thing, because they operate at such a large scale, the kind of investments they can do on technology side is massive as compared to any other platform that would be doing investment in India. Right? So let's take the example of Z5 for that matter, hypothetically. So I think digital business is all about scale. Now, if you look at the global companies, if you look at Amazon India or rather Amazon US, again, they've been expanding aggressively into multiple geographies. So the kind of deep dive expertise of multiple countries, the kind of technology expense that they can incur, the kind of expertise they can have in terms of scale or in terms of innovation is something which Indian companies can never have. Okay, so I think that gap will always remain for Indian companies versus the global companies. That's primarily because of the expertise, innovation, and the presence of so many markets. Because you learn so much about different set of consumers. But nonetheless, what has happened is that there are certain companies which have come up in a big manner in a market like India as well. Let's take the example of Blinkit. Now, Blinkit was someone who started in quick commerce much later as compared to Instamart. Instamart was the one who innovated in the quick commerce segment. Blinkit was idly grow first, then became Blinkit, and now it's an internal company. So I think these are things which are doing very well for Blinkit. So if you look at the numbers of Blinkit, you saw so much of competition coming in. You've seen Zepto, Instamart, Big Basket, Amazon, Flipkart is coming to Q-commerce now. But Blinkit has been able to maintain their edge. Right? So I think Blinkit, somewhere in terms of their data, their DNA, they have got things right. They're doing something right, which peers are not doing, which is why they're able to maintain market share despite such heavy fragmentation. So yes, there are certain names and companies which are kind of matching up to international standards. And there are some parameters to look at it. So one is, of course, the DNA of the people, right, in terms of systems, processes. Second is, of course, the data, technology, being tech savvy. And third, of course, is how happy the ecosystem is, whether you look at advertisers or the brand or the consumer experience, everything put together. So these are certain parameters which actually measure the success of a particular digital platform business. take the example of Netflix. A consumer will never be unhappy with Netflix experience or Netflix service. That's primarily because they've reached that level and they continue to just, do that same thing across multiple countries. It's like a rule book which they have. So I think there are some Indian companies which are emerging that way, but long way to go. Obviously, I don't foresee Indian companies or rather Indian e-commerce platforms expanding aggressively in global markets because those markets are heavily penetrated. Take the example of US, it's at 70% penetration. Take the example of China for that matter, it's at 70% online shopper penetration. So there's no room for a Blinkit to go over there. Economics are very different. But yes, thankfully our Indian market is very complex in nature. We have more than 25 states and each of the states like a different country because of multiple languages. So I think a lot of work to do over here. So that gap will always remain between a global counterpart platform company and an Indian platform company. But yes, somewhere there will be certain winners who will execute well, do well, and the gap will converge for them.
True. I think mention about China, zooming out and understanding what can India learn from China's integrated models. Like we see names like Alibaba, and how the Amazon's retail media scale in the US as well, right? Or Southeast Asia's, super app ecosystems like Shopee or Grab, right? So specifically, if you want to share something in comparison with China and then across the, global markets, what can India learn from them?
There are two things I have to add here in terms of perspective. China has been a super app market. Alibaba has been extremely successful there. And that's primarily because they're a technology first company. They were not a retailer. They're a technology first company which moved on to other business avenues from e-commerce to fintech and so on and so forth. Take the example of India. Super apps have not been successful. Reason for that is these super apps are traditional businesses.
True.
Take the example of a Tata Click or a Reliance or Jio. They are there in terms of market share. They'll be a reasonable number. They have a reasonable scale, but they can never emerge as leaders. Again, the same answer here: scale, the way they operate. A Tata Click will operate only in India. A Jio will operate only in India. They can never go to other markets. So they will never have the learnings from other markets, and they can't spend so much on technology as compared to what Amazon is spending at a global level. So I think the same thing. There'll always be a gap in terms of the way they operate. India, I think super app as a proposition has not been very successful. Also because of one reason is that, as I said, many of these companies may not have a DNA. They're not digital first companies. Obviously, they'll invest on R&D. They might be able to take risk, but not to that level as compared to what digital first companies are doing. So it may or may not happen. I'm not saying that Tata Click or Reliance may not become successful on digital. They can become very successful on digital via super app. But we need to have a very good user experience in place, a good model in place, wherein the new age customer is actually looking forward to that experience. It's typically an example of Netflix versus a ZEE5 or Netflix versus a Sony Live, right? You cannot compare both these in terms of platforms, in terms of the content, the experience. So I think that lag will always remain between these two companies. So India, that way, super app has not been a successful strategy. In fact, the new apps, like the case of Blinkit or in the case of Zomato in the food business, or you take the example of Zepto, which just came out of nowhere and seen reasonable success in the quick commerce business. This is something which is going to take the mindshare away. Right. Like for example, Big Basket is a large company backed by Tata. Right. Obviously, as you say, they are a conglomerate. They would have become the best in QCom today because Blinkit and Instamart were relatively smaller in terms of size. But Big Basket market share is less than 10% in QCom. So that just goes to show that it's not about the money or the conglomerate backing. It's about the people, DNA, technology and experience and knowing your customer, which is very important.
Do you believe that lag is also because of the, the less push in our entire deep tech ecosystem, which is there? I think I read somewhere that, India not have any core idea to talk about, which is very, tech first or digital first. But at the same time, if we have those startups, especially in the deep tech ecosystem, they're not getting that enough government push. I think a lot of DASCOM reports will also reflect that. So do you think that is a major reason or, an enabler in order, with the lag in efficiency in our India's ecosystem?
So I think more than that, it is about putting innovation as a DNA. Right. In many of large conglomerates, which is lagging. Right. So to actually support the key people in terms of helping them to innovate or investing in terms of R&D, taking risks, rewarding them aggressively, whether it could be via ESOPs or whatever manner put together. So I think this is something which needs to change.
Right.
I'm not saying that the larger companies will not operate at a reasonable level in terms of scale. They will always have that edge because, again, you can't forget the fact that they have got exposure towards traditional business.
Right.
And any of the verticals that you see today, e-commerce or online is only about 25-30% contribution. 60-70% today is still driven by the traditional business. So they do have that scale, that expertise. It is just about implementing it, putting all these 2-3 parameters in terms of DNA or experience or having the right people, risk-taking ability.
Right.
On how they execute, that is the key multiple. So I'm not saying that a Tata or Reliance cannot become an Alibaba. They definitely can. But it's an execution play. They have to really execute better as compared to the other companies because they have the wherewithal of capital, which other companies may not have.
Great. Now we'll just look at the future arc, say looking ahead to the next 10 years, say in 2035. Do you expect advertising to become not just a profit driver, but the very core business model of e-commerce? And also, what kind of revenue or TAM numbers support that view?
So as I said, advertising is not a trend which is for 2 to 3 years. I'll give you some numbers here. There's a consumer traffic number. India, you have got only about 200 million shoppers, which is not even 20% of India's population. China, number of online shoppers are more than 50-60%. So we can actually reach the numbers of China. So which means that for the next 10 years, you will continue to see growth as far as number of shoppers are concerned. Again, India in terms of smartphone numbers, only 50-60% of the people have got access to smartphones. China, that number is far higher, more than 70%. There's opportunity there as well. So it's very clear that I think these are mega trends, not about 1-2 years, a 5 to 10 year trend that e-commerce will only continue to evolve and grow as far as mindshare is concerned and consumption is concerned. So I think e-commerce will drive a significant amount of time spent, consumption, ad revenue and business from traditional markets or traditional businesses rather in terms of market share. And I think the only key multiple is that scale. And as I said, in the last 5 years, we have seen that platform companies are also able to scale up beyond the metro markets. And they done reasonably well over there. There were earlier concerns that, will a food delivery business work in a tier 3 or tier 2 market rather? That, people will not order there. Why would they order? Why would they pay? But that's all changed, right? So the more we're seeing people in that age group of youth coming in, these trends are only going to improve further. And as I said, it's a 10-year horizon. I think it's going to outperform the entire digital advertising market, be it social search, video, in a very big manner.
Great. I think a lot of useful insights we got from this session. We'll just move a bit towards a light-hearted segment for the session. I'll name a few trends, and now you have to respond quickly whether you would buy, sell, or hold, right? Since you're one of the most respected equity research analysts, I think we should bring on that game. So, quick commerce profitability in India.
Buy.
Okay. AI replacing traditional media planning.
Buy.
Okay. Social platforms regaining ad dominance over e-commerce.
Hold. I'm not too sure about it.
Okay. Indian D2C brands scaling globally.
Sell.
Okay. The future of TV in India.
Hold, I would say. Because, as I said, I don't see TV going down the level of print in terms of advertising share because there's connected TV support which is there. So, TV advertising budgets will move to connected TV in a very big manner. So, if you add that, it's a hold. It's a hold. But if you say connected TV, if you exclude connected TV and if you put connected TV on digital, then traditional TV could be a sell.
Great. So, with this, we have reached the end of our session. Karan, thank you so much. I think this has been most insightful session for all of us. I'm sure the audience here agree with me. Thank you so much for your time. I hope you had a good time, with this experience. And, we are really looking forward to your session going live on our channels. And to everyone listening, do not run your marketing stack of 2025 on a 2020 logic. Keep watching and stay tuned for the next upcoming sessions.